You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, today talking through the different commodities and touching on futures, exports, and price seasonality as we talk through them. And first, starting off with feed grains.
Yeah, corn and grain sorghum are primary feed grains that we grow here in the state of Kansas. And corn futures have been, since harvest, have actually come up and shown some strength. In essence, at their low here this fall, they got down to about four earlier in the summer. Pardon me, that'd be the Mart now, which is now the lead contract that's being traded off of by elevators, et cetera, what we figure basis off of. That's that traded down to about 383, 384 back in September, or pardon me, late August. So then went up to about 430, fell back down to 395 thereabouts. Now, after going back and touching that 430 or so, we're trading about 426 and three quarters. At least that's what we were yesterday on the market. So uh, we're in a market that's representing a seasonal situation. When you read the analyses, there's a fair amount of what technical traders call resistance at some of these levels, resistance from going higher, support from going lower. So in a way, we're sort of range bound. I would say that when you look at one technical tool, relative strength indices, which I like to follow, it's trading just slightly above 50% in the last several days as an average. So the bottom is not falling out, but we're not racing to the top either. So you got that going on. I would say we're in the mode right now of looking at demand issues. And what's right in front of us for corn would be ethanol demand on the one side, which is looking actually very, very good. Ethanol production setting about 2 weeks ago set a record. Then this last week was near that again. Stocks are actually declining, have been with the latest numbers I've seen. So that's a tremendous situation for ethanol plants and shown some profitability in all of that with lower price corn. And we have that happening as at the same time as we have uh, a decent pace of corn exports. Corn exports average about 38, well, had about 38 million bushels worth of exports for the week ending November the 14th. And overall, we're about with 11 weeks through the market year, about 21% of the way through. We're bought ahead by to about 53% of that, or about 1.2 billion bushels out of the 2.325 the USDA is projecting. So you stand back and we look at the demand of major crop like corn. And so what would affect the ethanol side? Well, it would be the U.S. economy. Where does gasoline demand hold up? And how does that affect ethanol? On the one hand, what would affect the export side? Well, uh, issues internationally. We'll probably talk about that later as we have time, but geopolitical risk affecting financial markets uh, impacts the U.S. standing in the world. We have had strength of late post-election in the U.S. dollar, and so that's kind of a headwind for exports. But overall, on the supply demand side, we're holding up okay, not anywhere near the price that most Kansas producers would like to have, which is about at least 50 to 75 cents higher at the local level. You would actually cover our costs, all of our costs. But anyway, we are as we are. And for grain sorghum exports, we've seen a so-so pace, about 2.4 million bushels for the weekend ending November the 14th. But and as far as being bought ahead, here, again, we're about 11 weeks in and about 21% of the way through, and we only have 18% bought ahead. Grain sorghum seems to be affected in a major way by trade discussions between the United States and China, and the anticipation that if there's one of our ag commodities that takes a that would be at risk to take a hit, it would be grain sorghum. And people see that because that's what happened the last time that the U.S. and China had trade tensions like this. So we're the USDA still projects about 220 million bushels of uh, corn of grain sorghum to be exported, but so far only 40 million has happened, and here we're about a fourth, one fifth of the way through the marketing year. So it is that situation is as it is seasonally. I think as you talked about at the beginning of our show, the there's the question, where will prices go this year? Well, if nothing happens, if it's a docile year, we don't have major geopolitical risks causing big problems, we would tend to see prices from October to November uh, ease higher from about 96, 97% of the overall season average price that we've seen for this marketing year, and then move somewhat higher into March, a little into February, a little sideways to slightly lower in March, and the real strength to come in May and June, particularly May. So for anybody storing corn unsold, that's probably what we're looking for, and are watching the news closely to see what else in the world might occur in terms of factors that could change the market. So far, that probably aside from these geopolitical issues on the demand side, uh, they've had rain in South America, a major competitor for corn, and that really, other than just general risk and uncertainty, not really seeing any big threats so far to production out of South America. So there's still quite a ways to go. We'll be watching that closely all the way through December, January, February, and March. But so far, no big problems there. And even with that, we've got a market for corn futures that's basically pretty much hanging in there sideways at about 425 to about 430.
Dan, what are we seeing for wheat?
For wheat, we'll move a little quicker on wheat. Basically, we've seen uh, prices close for wheat futures yesterday at for hard red winter wheat futures at 555 and a half for the Dees contract, 567 uh, uh, and a quarter on the March contract, up about 5.5 cents. And that price, uh, the wheat market has shown more weakness generally than the feed grain market, than corn futures. Had dropped down here we just in the last week or so to below 550 for the March contract, have come back up to about 567. The highs here in the last 3 months were basically at about 630, 640. So just a kind of a quagmire of a deal, in that uh, dry conditions in the Black Sea regions, the threats of all that's happening, uh, riled up worries in the world side of export movement. We had about 3 or 4 weeks of pretty strong wheat exports coming into play, but things have kind of slowed down since then. U.S. hard red winter wheat exports uh, came in week ending the 14th at just a little over 2 million bushels. We need about 4.7 to meet the USDA's projection. So after some excitement, we're back to going sideways. Really, probably the biggest news in the hard red winter wheat market right now is that we had rain, and our prospects have improved quite a bit. Seasonally, from where we're sitting right now, we tend to see wheat prices actually from October to November, really all the way through February, moved just slightly higher. It's really a pretty flat market. In the last 5 years, and when we've had anything happen in the wheat market, it's happened mainly out there from April heading into May. And I don't know if people can store wheat that long to wait for that, but that's when we've seen price movement happen.
And wrapping up our commodities for today, talking about soybeans.
Yeah, soybeans closed yesterday, the January contract at 977 and three quarters, down 12 and three quarter cents. Again, uh, that's noteworthy there. It's we're below 10, we're below $10 a bushel. And wheat along, pardon me, soybean futures, the March contract, pardon me, the January contract, just about like wheat in terms of showing weakness of late. In essence, the lows that we had back in August of 2000, well, of this year, we're back at them. Uh, so we're not displaying a lot of strength in terms of soybean futures at this point. In fact, the last 2 or 3 weeks we've been side in a tortured path basically sideways to lower. And I would say now that's happened at a time where, gosh, we've been moving some beans. That's been a good thing for the week ending the November 14th. We moved 90 million bushels of wheat, which is a very good pace. We need about 29 to meet the USDA's pace. So meet the USDA's projection. And of course, you're dealing with a situation where we have about from now till about into January and February or early February to make hay, quote, in terms of U.S. soybean exports. So this is the time to do it. But after that time, once what's coming out of South America starts to come, this 90 million bushel number falls way off to 5 or 6 or 7, maybe 10 million bushels. So pretty tough. The seasonality for soybeans and the limited time we've got left, basically less for soybeans than for feed grains, more than for wheat. But from October, November, we tend to see price rises into January, but in a little bit more into February. But gosh, if anything's going to happen seasonally, in the last 5 years, it's happened from now into January, and from there, absent major crop problems in South America, we've seen pretty much sideways prices, and so the very high was in May, of course, but you were almost there, just within a few percentage points of it by the time we got to February or March. So we tend to jump up into January and then plateau. And with that, it's a coin flip whether you hold them anymore and it's going to pay off or not. Do we end up with a drought in South America?
And
And I'd say in terms of geopolitical issues this go around, uh, China, the dominant soybean buyer in the world, has been uh, again with these trade issues all up in the air. Been buying aggressively from South America, Brazil, Argentina, and you do have some things happening in soybean oil, soybean meal that have had brought in some support at times into the market, but so far we're here just ahead of Thanksgiving, markets being just kind of so-so, uh, all sorts of things happening overseas that if they affected shipping lanes, if they brought about sanctions, would change the face of these markets in a major way. But they're not happening yet. Until they do, we seem to just be thinking that, well, we're going to wait and see if they actually occur. When they do, we'll react then, but we're not going to worry about it that much at this moment.
Dan, I appreciate you taking the time to join us and give us our grain market update.
Thank you very much, Shelby.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on agriculture today, but stick around because we have more for you up ahead.